Okay, welcome to the Swing Trading with Cycles channel. This is our update on crude oil. We'll also look at natural gas as well. And so we'll start with US oil, so WTI crude. In our last update, and as always, you can find that last video as a link in the description. It is November 17th, by the way. So Thursday, we have one day left we have to complete today, and then we have Friday left to trade. So the weekly candle is almost closed. That's important to understand because we always say that candle closes are really important, but when you get close enough to a candle close, you start to get to a point where it's probably not going to change by too much, right? It's like, are we really going to get a crazy violent move tomorrow that's going to completely transform the weekly candle? It's certainly possible, but how likely is that, right? So starting with the daily chart, I mean, look at this vicious downtrend, right? I hope that's like very obvious, like from this daily cycle, which topped out on day 24, that was June 14th. We just started this cascade lower, and we've had little bounces in between. They've all been sold off, right? That's what a downtrend is: lower lows, lower highs. These are the little lower highs. And so we're in this cycle here, which has stopped that. Like, notice, that's important. It's like we had this parabolic move with the war and everything. Then we had this sharp move down and really just this churning consolidation. Then we had this little uptrend that started, and then it fell off a cliff, and we just cascaded lower. And this will be clearer on the higher time frames. That's kind of the whole point of the multiple time frame analysis. But we've now come to this area where we're just consolidating, and we talked about that in the last video, how we're basically consolidating between $90 and $82, more or less. And so today we're threatening to break down below that $82 level. In fact, we have broken down as I'm speaking. We're at 81.93, right? So we've broken down below that zone. This could certainly become a false breakdown. You always want to be aware of that. You always want to think about both sides of the scenario, right? Like, oh, this looks really bearish, but what if there's a massive reversal? Like, just be aware of that and be ready for that. But as of right now, this appears to be a daily cycle that has topped out on day 30, as we talked about, and is now seeking out a daily cycle low. We're already testing this level. It's now a question of, do we get down here? And more importantly, when we look at the weekly cycle, what does that mean for the weekly? And I tweeted about this. It looks, this has the appearance that last week was the high for the weekly cycle at week 6, which is not a good sign because these weekly cycles tend to be long. Or I should say, you can see this weekly cycle here, this one, the war-fueled one, was 19 weeks long. The cycle after that was 24. Like, we were just looking at that daily chart with that huge move down on the daily chart. That's this weekly cycle, which topped out on week 9 and then proceeded to fall for for 15 weeks, right? That's what that means. You have a 9-week rally and you have a 15-week decline, right? And so this weekly cycle has just been like horizontal as opposed to vertical, where we didn't really we got this big up candle on the week of October 3rd. But since then, we've just been consolidating inside the range. And now we're threatening to test the bottom end of that range, which is $79.67, right? So we're not very far from that. So it looks like we're probably going to hit that. That gives you a good near-term price target. And then it's a question of, like, if we really top down on week 6, again, this one topped down on 9. So, like, and we had this massive decline. We could be in for something similar to that. That's something we want to be vigilant about. And what does that do to the monthly? So the monthly is solidly red, right? And yeah, the big level on the monthly would be last month's low, which was that 79.67 level. So it works out that way very often, right? That levels coincide. So that low on the weekly chart happens to also be a new low on the monthly chart, which is a really big signal. And it's just more of an indication that we are still in the 3-year cycle decline. So the 3-year cycle peaked on month 23, which is what this is. So we still have a potential swing low for September, right? That's what this arrow is. We had that little follow through that next month, that October, but now we're starting to see, really, this is just consolidation, right? We haven't gone, and that's what an inside candle is, right? And so it's really a question of, do we test that? What happens when we test the other side of $80, basically, right? Like, do we fall off a cliff, or do we bounce hard and it becomes a false breakdown? And I would also call your attention to the quarterly chart. I mean, look at that. We have a swing low on the quarterly chart. That's important to know about. That swing low is active below 92.96, right? Which is not a coincidence. Remember, we mentioned how we were oscillating between 82 and like 90. So obviously 92.96 is higher than 90, but it's the same kind of zone. That area becomes a supply zone, a ceiling of resistance. And my God, look at the current quarterly candle. Always important to know where a candle opens so you know where it goes when it goes from green to red. This candle for the quarter opened at 79.67. You see how all those levels are converging? So if we break below 79.67, we go red on the quarterly candle, which just becomes follow through on this big bearish red candle from Q3. Not good. But things could reverse, things can turn around. We always have to be prepared for that side of it as well. Next, we'll look at natural gas. So I won't spend too much time on like the micro. Let's look at the macro picture here first. And so if we look at a monthly chart, my eye looks at this as one big move. Now we've had these big drawdowns. So this 2-month period, this 2-month period, this 2-month period, or this 1-month period. But then we always went on to make a higher high after. And so one way you could read this is one big long-term cycle. And so far the top was month 25, right? So this right here, that was what month? That was August, right? So we made a high of $9.97. Now I know natural gas is incredibly seasonal, and as I always, full disclaimer, I am a price action expert, not an expert at resources or commodities or any of the quote unquote fundamentals. I totally think fundamentals matter, but right here we're focusing on price. And so again, I know it's seasonal, things are going to happen, what have you, but these are the important levels to be aware of. So maybe we've run out of gas and we're now rolling over into a longer term cycle low, similar to oil. The way we just talked about, it's moving into a 3-year cycle low. Obviously, this one topped out early or later than oil. It kept running and made a new high. I mean, this big bearish candle, to be clear, that was a swing high too, right? Except in this case, the swing high failed, you can say, right? Like this swing high failed, right? Instead of getting downside follow through, the next month you consolidated. This was just an inside month. It's a big, beautiful green. Well, I don't know if I would say beautiful. This upper wick isn't super inviting, but a big green candle, albeit with the upper wick. But it's all just inside the range of this one. It's always important to notice that. Is it inside the range of the previous candle? Because if it is, that's just consolidation. That's not a higher high. It's not a higher low. That's just trendless on that time frame. Now, certainly there could be a trend on the smaller time frame. You zoom into the daily, what have you. But on the monthly time frame, not really doing much. But then we have this follow through in August. It makes a high. But then we make another swing high after that, right? And the important level I want you to be aware of is this month's range, right? So we still have some trading to go in October, in November, obviously, but we are now basically a doji candle, right? So the high has been $7.32, and the low has been $5.68. And so, assuming nothing crazy happens the rest of the month, we're probably going to open as an inside candle, right? And the way we know that is that's just an important, just general principle. Anytime you have a wick, whether it's an upper wick or a lower wick, in this case, it's obviously both because it's a doji, you're setting yourself up for the next candle to be an inside candle. The reason for that is really simple. If price closes here and there's still a wick way above it, then it means logically the next candle, all things being equal, if something crazy doesn't happen, there isn't some big gap down, it's just going to open like right there, right? Another way to think about that is it's going to open within the shadow of the wick. I think that's probably why, in some cases it's actually called the shadow, right? So that kind of makes sense. That's just important to know about. As long as we stay between $7.37, or what is that? What are those levels? Between $7.32 and $5.68, we're just consolidating here on the monthly chart, which is a big time frame and one you want to be aware of. And what does that look like on the quarterly? So that's important, right? So for the quarterly chart, we are actually red on the quarter, and we made is that a slight lower low? $5.30. Yep. So this quarter made a slight lower low at $5.30 essentially, just a little bit below that. Now, same thing that I said about the monthly candle also applies for the quarterly candle. Look at all that wick, right? Again, so now in this case, there's quite a bit of quarter left to trade, right? We have all of December and we have to close out November. So because also we're at the upper end of this range, it's possible we could just make a new high and this candle will look different. It'll go from from red to green for one thing, right? The open for this candle is $6.88. So once we get above that, we would be green, and there's a chance that might happen. But if let's say we move lower and we just kind of oscillate, that would mean that the Q1 candle for 2023 is going to open as an inside candle, right? Something like this, right? This little rectangle I've drawn here as an illustration. So that's important as you're kind of thinking about scenarios building out. Also, just notice this huge wick or this huge swing. Well, it's not a swing high. We actually need to get, and that's important too, right? Do you see how this quarter, this quarter, this quarter, which we're talking about 3 quarters now, almost an entire year, have all held this level around $5 and call it $5.35. That's a really important level. And this month we made a low at $5.29. So I call it $5.28, right? We breached that level and it looks like we could see a waterfall move down to $3.60 easily, right? I mean, look at these candles. I mean, that's really interesting, right? They just kind of cluster together. 3 quarters of consolidation is what this is. You see these 3 candles? I hope that's clear. We went up and it's like, oh my God, we're going to the moon. Then the next candle's like, no, we're not. We're going lower. And the next candle's like, no, we're not. We're going higher. And then you have this one to finish things off. If you understand how candles form, at one point, this was a beautiful green candle. I'm not saying that because I was looking at it in real time. I'm saying that because I know how candles form, right? Think about that. This candle opened, and you can almost not, you almost can't even see it because the body is so small. But this candle opened here, right, at the top end of the body range. And it closed here at the lower end of the body range. So just we'll put numbers to it, make it easier. It opened at $5.66. But the high was $9.65. So that means at some point it went from its opening price of $5.66 all the way up to $9.65. Only to reverse and close at $5.50. I mean, what a wild, ugly ride. But that's really important to know that in real time, this looked like massive follow through on a quarterly level off of this move. And then it just became a big fake out. But then next quarter, we actually also made another higher high. And so all of that to say, as a candle is forming in real time, you want to be thinking about how it might be playing out to kind of close out, because that's going to tell you what the longer term trajectory of an asset is going to look like. So that's just a really important kind of way to sort of think about it. And just for the sake of argument here, if you look at from this low here to this low here, it's about 29 weeks, right? And we're already at 29 weeks here. These things don't have to work on a dime, but what it tells you is there's probably some 30, 36. Obviously, that's a big range, but call it something in the 3-year neighborhood in terms of cycle length. And so that's probably the cycle that we're declining into right now for natural gas. Although there's certainly going to be a lot of volatility in between, as we've seen. But again, this monthly level is what we want to watch, and then more broadly, we want to be aware of where we're at for the quarterly. And I hope you can see that it's these 2 monthly candles combined that form that quarterly candle, right? Because remember, we had that low at $5.30 essentially. That's from this candle. And then the high is actually from this candle as well, because is this candle an inside candle? No, the high is actually from this candle. So this candle made a slight higher high, this quarterly candle. So that's natural gas. So we looked at U.S. crude oil. We looked at natural gas. I'm not going to look through all the names in detail. They're all kind of doing the same thing here. The monthly chart doesn't look super healthy. You can see, well, healthier for some versus others. I mean, XLE has gone red, XOP has gone red, Exxon has gone red. Like, these aren't the quarterly candles you want to step in on. PSX, that just has been reduced to a big doji candle. OIH, not quite red yet, but going there. ConocoPhillips. Devon energy is deep red. I hope you're as I'm flipping through these, you can kind of get a sense for which ones are looking worse than others. Some are deep red, some are just only now turning red. Marathon Oil going red on the month now. Chevron, same thing. What I do want to show is this Exxon versus the S&P ratio chart going back really since 1969, because I love that, these stocks that have a ton of history. So on the left panel is Exxon itself in absolute terms. This is your annual chart. Every year is 1 year of price action. And on the right, this is Exxon divided by the S&P 500 itself. And so you can see this period from, call it 1982 to 2002 was a massive move up, right? Let's just quantify that real quick. And let's do it from right here, from that swing high. Actually, let's do it swing high to swing low, right? Even if you got out at the bottom, after this swing low, right? You panic sold at the bottom, right? Of this, more or less. That's still a 600% move. And that's from 1982 to 2002. What did it do for that same period, the ratio chart? So that's 1982. And then that's 2002, right? Is that? No. There, right? And obviously this is a ratio chart, so there's a lot here in terms of you have two things that could be moving, that are moving at the same time. But also, forget the percentages. You can just see this is just a straight up vertical move, and this is just very sideways. Which means, although Exxon was rallying like crazy, the S&P actually was doing pretty well also. I guess let's just see what was the move in the S&P for that period, just for shits and giggles. So from 1982... let's just call it that, something like that, right? So the S&P increased, right, by 1,300%, almost 1,300% in that period of time. So you would have made more money being in the S&P than you would have in Exxon, which is what, just this kind of choppy queasiness, not looking great, right? Now, what do we see though? After that, we have this massive top. This massive swing high. Is that on? Let's see here. Is that, so that is 0.10, 0.10. So yeah, it looks like the swing high happens in 2009. Basically that makes sense, right? That's when right. So this is actually really, that's actually really important, a really important note, right? So 2008, that's actually really important. So 2008 was actually a very deep red year for the S&P, right? Very deep red because of the global financial crisis, right? And then 2009, we again, just that principle, how does a candle form? We know at one point this candle was deep red. It was ugly, it was scary, right? Think about that. This candle opened here at the bottom end of the range. We know that because it's green, and it closed here. So it opened at, what is that, 903, but it had a low of 666, right? So we opened at 903, but we dropped all the way to 666, and then we closed at 1115, right? So massive volatility within the year. What this just means is at one point, this was a deep red candle, and you wouldn't be wrong for saying oh my God, I got to get out, because you made a lower low below the 2008 low, right? Look at that. But then we just reversed higher and went green, right? And so another way of thinking about that is it's a false breakdown, right? On the yearly level. So on the biggest time frame possible. But the point I want to make here is you have this big red year in 2008, and then you have this green hammer year in 2009. But if you look at the XOM versus S&P chart, it's the reverse. 2008 was actually very very green. And then 2009, it closed deep red. It ended deep red. That tells you that Exxon continued to rise in 2008, even while the S&P was falling. And obviously we can literally see that here, right? We can see Exxon was green. Excuse me. Exxon, we can see here, Exxon, although it was red for the year, it does have a much more pronounced lower wick, which means there was a pretty massive rally within that year, right? So it was less bearish than the S&P for that year. But then the following year, once the S&P bottomed and started going to the moon, we've just been making lower lows and lower highs. And I'm going to zoom in on this now, just to make sure that like we're all on the same page. And that's why I always we say this. We talk about how the market trends. Like we do something like this. That's a downtrend. It's never going to be perfect, right? So you have to impose that structure like yourself and like literally use the lows and the highs to calculate that. So let's just we can draw it though. Like I hope you're starting to kind of see it on your own. We made a move down here. That's your lower low. Then we made a move up here. That's your lower high. And then we just dropped for like 4 years. Then we make another lower high. Then we drop again. So now the question is this a lower high? And then we're going to drop again, right? Or are we doing something like this, right? And then like this is actually a massive, like this is the start of a massive reversal. That's where we're at, right? Like this is a very kind of pivotal point. Now we're probably going to see some big downside across markets if we're really going to have a recession in 2023. Which again, this is a ratio chart. So if both tank, XOM and S&P, you could see a world where this continues to go green because XOM, Exxon doesn't tank by quite as much. But like the strength of this rally, the way we've already taken out several lows, like this is a pretty big bearish candle that we've just completely wiped out. You have to imagine we're at least going to make a run up here. And again, what that means for the prices in absolute terms remains to be seen. But what this tells you is there's probably more upside for Exxon relative to the S&P than it would appear. And that's important because when you look at these charts at face value, you're like, oh, wow. And I mean, this is pretty bullish too. Like it's like the absolute chart. You have this like big, beautiful swing low here on the yearly level. Like, look at that. I hope that's clear to everybody, right? This is a massive swing low on the yearly time frame. This is a beautiful chart, right? Once we went above $71.37, that was a swing low for the year, and we're now obviously at $111. Wouldn't be surprised to see we backtest that level at some point, right? That would be an important level that we need to hold, right? But like that's what and this is a yearly chart, which is the beauty of it. This is exactly the kind of price pattern you'd see on a daily, on a weekly, on a monthly chart, except this is so much more significant because you have all these years of chop of just really going nowhere since 2008. Didn't really plunge too much. We did get a plunge in 2020 that we kind of recovered from. You can think of this as like the slingshot, right? Now, again, still a scenario where this becomes, actually, it's not a lower. So on the absolute chart, it's definitely not a lower high. It can't be because it's a higher. It's definitely a higher high. But it's really a question of, is it going to continue to outperform the S&P the way we've had that slingshot move? And it does suggest that's very possible. Again, even though we're at all-time highs here, which certainly could make people a little bit nervous. That said, as we talked about at the beginning of this video, oil is probably about to take a bath, so about to go lower. So we do want to be, if you're thinking tactically here, there might be some short-term downside. But my God, again, just a beautiful chart. So I'll leave it at that. That's our update on energy. We were able to look at natural gas today, which I hope was helpful. I'll continue to give updates on that as well. But yeah, let me know if you have any questions in the comments, as always. Thank you.